welcome back to our podcast, Good Deeds Real Estate with a Mission. I am Nicole Quinn, representing the Fine Homes Group in place of Diane today, and I'm here with our team leader, Bill Weidecker.
Yes.
Yes, and we are going to talk a little bit about numbers, the market, the economy, inflation, and where we see all this going.
Yeah, so it's interesting, Nicole, because today's Wall Street Journal, the inflation for the previous month is at 9.1%,
Yes.
up over May. So the June numbers are 9.1% higher than they were last year.
Mm-hmm.
And May was 8.6%. So this is the highest inflation rate we've seen in 4 decades.
Yes.
And so the Federal Reserve, this is going to put pressure on the Federal Reserve now to make a determination. What are they going to do? The market has kind of cooked into or baked into the fact that they were going to look at a 0.75% or 75 basis point increase in the rate.
Mm-hmm.
There's now talk that it may be 100 basis points, which is 1 percentage point.
Yes.
And so that is a very large increase should that take place. Now, that's going to happen in 2 weeks' time. We're going to see that on the 26th and 27th of the month. And, there's going to be lots of talk about this. Be on the lookout. There's going to be lots of conversation about what is the Fed going to do 2 weeks from now. Everything is costing more.
Yeah.
We know that gasoline is up close to 60% over where it was a year ago. Now, not only is it costing us money at the pumps, it's costing us money in our goods and services also, because everything that has to travel costs more. Now, what does this mean for real estate? We talked about this, is many of us spend time on a national call every single morning. We're on a local call every single morning to determine what's going on and what are we hearing from our colleagues. And I have to tell you that we're seeing different things in different markets, even in this state. So there are portions of the state that are still red hot. Anybody that thinks we've moved into a buyer's market is not. We're not there yet.
Yeah.
We can talk about a lot of things. It's whether it's inventory or affordability. Where do you think that we want to put a little time in?
I think it's important to talk about affordability. I do think we should get back to a little bit of how that inflation is going to affect the real estate market, if you have any insight on that.
Okay, so let's tackle them in order.
Okay.
Affordability.
Mm-hmm.
So the June numbers just came out, and affordability has actually gone down again. So we've noticed this to be something that's on our dashboard. And a year ago at this time, the median priced home and the median income earner was making 102% of what was necessary to afford the median priced home.
Mm-hmm.
So making just a little more than what was necessary to afford it. So it was 102% affordable. Now, same month, just a year later, we know that prices have gone up. We know that interest rates have gone up. So affordability has gone down. It's now 70. We've gone up from 102 to 70, meaning that the median income earner in the state is making 70% of what is necessary to afford the median home, not making enough.
Right.
This hasn't stalled sales. However, I think if we were to just sort of cascade into the future and say, what happens if interest rates continue to go up? What happens if prices continue to go up? Where do we land? And I do believe that we're going to see the first rung of that ladder, first-time homebuyers, start to be priced out of the market. Not there yet, but they're starting to make decisions based on the fact it's costing me more every month. It's also, the prices are higher. So they're starting to be able to say, well, we can't buy the house we were looking for. We need a lower priced property. Now, for those that are buyers out there that are still looking, saying maybe we should rent prices are up the highest. We saw the highest increase in rental nationally, 0.8% for the month. So we are looking at 10 to 11% increase in rental costs on an annual basis. So there's no safe haven in terms of renting either. And here's the other thing: there's no tax benefit in renting.
True. Very true.
The other question I think was, Where do we, what does inflation long-term look to do for us? I think if I had to look back to the past and say, well, how will that affect the future? I think what we're going to see is if interest rates continue to go up, we'll see eventually a stall in prices.
Mm-hmm.
Now, here are the things to look for. Price changes on properties, an increase in average days on market. So, right now we're running the average days on market's about 3 weeks, folks.
Yeah.
So you can sell a home in less than 3 weeks' time. Now, that's the average. Most people that are properly priced are selling that property in a week.
Yeah.
So I think what you'll see is increase in days on market, increase in price changes, and increase in inventory. Now, to get to a market where we say stable, we're around 2,000 houses, single-family homes,
Mm-hmm.
on the market in the state. So that's a 1.1 month supply. What constitutes balance in a market? 5 to 6 months. So if you say there's around 2,000 for a little over 1 month, where do we get to 5? Well, we're not going to reach balance or anything close to what it feels like balance until we get to 5,500, 6,000 houses.
Right.
And even though that still will be considered a seller's market, it's going to feel a lot different than right now when we have under 2,000.
Yeah. And we still have quite a way to go before we get there.
Oh, indeed. And now, what I know about shifts in markets is nationally speaking, we hear these things as they sort of go back and forth over the course of time in the month. And what we hear in one part of the country might not have any bearing here. But when there is some kind of a shift locally, it's usually quick.
Mm-hmm.
Most shifts that happen locally, not just this state, but anywhere in the country, the local shifts are fast. So we're not there yet. For instance, I did see cancellation rates on contracts, properties that have gone under agreement. Las Vegas most recently had close to 27% of the properties that went under contract were canceled by the buyers. So that's a big number, 1 in 4 falling out. It leads me to believe that buyers are starting to get a little more feisty in the country. They're not there yet here, and that'll happen as inventory starts to increase.
Yeah. They have the option of being
Still a huge opportunity for sellers out there. If you're looking to sell in the next 12 to 24 months, you really should consult us to determine whether now's the time or not.
Yeah.
It really depends on a lot of things that are going on in your own household, but we should certainly talk.
Yeah. And there's never really a time that's too early to talk about it.
No, because talk costs you nothing, and it maybe arms you with the right tools and shield to insure yourself against the future.
Yeah, absolutely. I agree. So if you could give a piece of advice for anybody who's looking to enter the market, what would that be?
Well, so you've got to look at the fact that there are buyers and sellers out there, all right? So for those that are buying and selling, there's good news, because in the past many sellers have said, I would sell if I could find some place to buy. Well, inventory's starting to tick up, and also if everybody that said that put their properties on the market, we would not have an issue.
That's a very good point.
we just wouldn't have an issue.
Yeah.
Everybody would be able to find something. Now, if you're buying and you say, well, maybe I should wait. There's an article in this morning's Boston Globe about the fact that while we see prices across the country start to maybe reach a point where they may stop, there's some belief out there that landing may not happen that way in Boston. And we are, for all intent and purposes, part of the Boston suburbs.
Yes.
And maybe even more attractive than some of the Boston suburbs because of our tax structure and the fact that New Hampshire is just a great place to live.
It's true.
So for those that are buying, I would say go back to your reasons as to why you want to buy. And, there's a saying that we used to use years ago is buy the price, date the rate.
Yes.
Because the interest rates are higher, if the Fed does what they want to do, and that's get inflation under control and then lower rates, we may see a lowering of rates 12, 24 months from now. But we're not going to see that in the short run. So if you're looking to buy, I think there's hope out there because we are noticing that buyers are getting their offers accepted a lot more easily than they were 6 months ago, for sure.
Absolutely. Anecdotally, I can definitely agree to that.
Yeah, and sellers, for sellers, listen, we've not shifted into a buyer's market, but as I said, shifts can happen quickly. So if you're looking to move, and you're looking to move in the next 6 months, for God's sakes, let's have a conversation and figure out maybe we can do something right now and not have you have to move for a while.
Yep.
So talk to us, I guess, is the point.
Yeah, that really is what sums it up.
Indeed.
Yeah. Is there anything else we need to say today?
No, this is a little different only because Diane is out conducting business today. So.
She is, as usual.
Yeah.
Well, thank you for that information. I feel like we've all come away much more informed, as usual. And thank you for watching. Please be sure to subscribe to our channel on YouTube or follow us on your favorite podcast platform.